Hey everyone, Michael here. In today's video, I'm going to be teaching you everything you need to know about Smart Money Concepts Lux Algo Indicator on TradingView. This is going to be for everybody that enjoys trading Forex pairs, the stock market, and of course the crypto markets. We're going to split this up into a few different sections. First, we're going to explain exactly what Smart Money Concepts is. I'm going to be teaching you guys every little thing that you guys can do on this indicator. Next, we're going to be talking about how to actually use it and make a profit. And then finally, I'm going to put everything into a massive strategy that you guys are going to be able to use and understand very easily. That way, you guys don't really have to focus too much on what everybody on the internet saying. You guys could actually see this, back test it, and then once you guys are comfortable with it, you guys can start moving from paper trading over to real money basically. Now, this type of video does take a long time to make, so please make sure if you guys can to hit that subscribe button, hit that like button. I would appreciate it a lot. Now, let's get started. First thing, as always, is I want you guys to open up a new layout. That way you guys can start 100% fresh. It doesn't matter what your background is, doesn't matter about any of that type of stuff. Then what I'm going to do, and you guys don't have to do that, I'm just going to zoom in to 175%. That way you guys can just see everything I'm doing. Sometimes if I've zoomed in at 100%, you guys really just can't see what's going on. For me, I'm actually going to take off the volume. I don't use volume all too much while trading. You guys can if you want to. It's personal preference. Next up, we're going to go over here to indicators, metrics, and strategies, and we're going to type in SMART. At the very top of community scripts right here, you guys are going to see Smart Money Concepts Lux Algo by Lux Algo. You guys are going to click on this. I would also recommend you guys adding a gold star. Now, before we start going into this and changing everything, because of course we're going to be talking about all of this, exactly what each thing does, just so you have a mastery of it, because I don't want you guys to be like a lot of people that just kind of understand indicators a little bit and you guys can't really figure out how to make a profit off of them. I'm going to teach you how to make a profit off of this. What we're going to do instead is go right back over here to indicators, metrics, and strategies. Again, I want you guys just to type in SMART. You guys are going to see all the way at the right hand side of this, there's this little button right here that says read more. I want you guys to click on it. We're going to give you a brief breakdown of what exactly is going on here. You can see a bunch of change of characters, break of structures, equal highs, and stuff like that. And we'll be going over that in the next few minutes. Okay. So basically, this is an all-in-one indicator. A lot of you guys have issues when you guys are purchasing the cheaper versions of TradingView. Not everybody's, paying for the premium when I understand it. So this allows you to have a whole bunch of indicators in one, so you guys can actually get more information from your charts and your data without having to pay more. And, that means you guys aren't losing as much money to just the upkeep of learning how to trade, which I think is very important because not everybody has a lot of money, well, especially in this inflationary environment, of course. So what we're looking at when we're talking about smart money concepts in general is we are looking for these BOS signs and these COHOCH signs, right? Change of character, break of structure. The way this normally works is you're just trying to figure out which way the momentum is taking the chart. That way you guys know which way to short, which way to go long, and you guys can make those profitable trades. So when you guys see higher highs like this, you guys, of course, will know that the market's going up. When you guys see these break of structures right here on your chart, you guys can see the explanation right there. A price breaks a prior higher high in an uptrend or a lower low in a downtrend. For now, let's stick with the bullish move. So every time you're making new highs in a trend, that's a bullish sign. Those resistance levels are being taken out. You're going to be happy if you're holding a position during that time. Now, you'll see right here we have a red change of character. Right here, a change of character is a price breaks a prior higher low in an uptrend or a lower high in a downtrend. So let's stay with this part right here. Price breaks a prior higher low, higher low, higher low, higher low. When you break down below that, all of a sudden you're not going up. You're going sideways and or down. That's not the way you want to go. So if you have a long, that means that something is wrong and that you guys should either sell some, scale out of your position just a tad, or you guys can just hold on and you guys are looking at a larger move. We'll talk about that in the strategy section, okay? Now, just like you have break of structures going up here that are more bullish, you can have break of structures that are bearish right here, here, and here. If you're making a new low, a lower low, a lower low, and of course lower highs, of course you're going to be looking at a more bearish chart. Afterwards, after you have a break of structure so many times, you're eventually going to have a change of character that's green. Just like we talked about here, you're breaking above a lower high. This is breaking above a lower high. This is breaking above, a higher low. This is a lower high, okay? Once you break above that, this is usually going to be a buy sign for a lot of you guys, and of which case you're waiting for the momentum to change, and that momentum shift is giving you a reason to buy. Again, you're not only going to be doing that, but that's just the gist of how you're going to be using this indicator, okay? Now, You can see these signs over here if you want to. Bullish breakup structure, breaks prior higher. This is a nice little cheat sheet. So if you guys do want to copy this, all you guys have to do is come over here and you can actually copy the image if you want and save it over into some type of document, if you will. What I tend to do is actually just go down here. I have like a little snippet thing, and let me pull this over. I'll just copy it, add it to a file, and then I'll have all this stuff on a separate monitor. If you guys don't have separate monitors, don't worry. You can always come back to this for any type of help that you guys may need. Now, there are a few other things here. It'll show you guys some of the order blocks, some of the other signals. For now, we're not going to worry about that all too much because that's going to be more for the strategy. But you guys will see this right here, a swing change of character. You see how the price continued to come down afterwards. You need a break of structure, break of structure, a break of structure. The thing that's going to be important, and I don't think you guys are going to be able to see it just because everything is so small, hence why I'm zoomed in already, is that you see there's a solid line and there's a dotted line. Solid lines are much more impactful than dotted lines, all right? Most of the time, you're going to see more dotted lines like this. And that's just because you're going to see a lot of the smaller movements that you guys get throughout the day. But when you have those solid lines, that's a seismic shift in your mind, like, uh-oh, something big is happening. That's what I want you guys to understand. Now, a few more things about this. You guys can see the order blocks. Again, this is more strategy. We'll talk about it. But if you guys, before you start watching the whole of this video, if you want to read through this, you're free to do so. I'm going to give you guys this information and much more over the next, well, who knows how long this video is going to take. I want you guys to be able to master this. Now, that's the wrong chart here. That's the one we just came from. I'm going to scroll all the way back up here and just hit exit. Now, after we've done that, you're going to see a whole bunch of stuff on your chart. We're going to go over here and we're actually going to hit settings. Now, we're going to go through all of this, so bear with me. If you guys don't want to know this stuff, you guys can always skip ahead. I'll have chapters for this, but I highly recommend you pay attention to this because this is how you guys tweak it to your personal trading style. So we're going to be coming back to this a few times throughout the video. So right here, you guys are going to see mode and style and color candles. That's the first section. I would say this is probably where you guys are going to make one change and not really mess around with it too much. You guys are going to have mode, historical, and present. I would keep this as historical so you can see a lot more long-term data. If you guys go over here to this eye and just hover, you don't have to click. It'll say allows to display historical structure or only the recent ones. I want you guys to have everything so you guys can have the full picture. You guys can always zoom in on the full picture if you want to, but having the full picture is usually the best thing. Next, I want you guys to focus on style. You guys are going to do colored or monochrome. Monochrome just takes away all the color. I like colored, and I'd keep it at historical. Next up, this is a personal preference, but I would recommend that if you guys are new to trading and you guys want to make your trading just a little bit easier, you guys are going to turn the color candles on. And so when you guys have a green change of character, the candles afterwards are going to be green. If you have a red change of character, the colors are going to be red. All right. Does not matter if it's dotted or a solid line. And so if I get this out of the way very fast, you guys are going to see just by following these signals, if you were to buy, oh, this is actually something. If you notice, this doesn't happen to everybody, but if you notice that after you have it colored and you click away and you see how it's no longer colored, what you guys have to do is just right click on a break of structure or anything like that. And you guys are going to see this thing that says visual order. Just hit bring to the front and voila. Now I can click around and nothing happens. Now, if you just follow this, you're going to notice that a lot of the time it actually gives you some really good plays. So you can see it worked over here a little bit. Well, still remains to be seen, but we don't know yet. This one worked like a charm for Bitcoin. This one right here did not really do all too much. It went a little bit higher, but let's be frank, it didn't really do much. This one right here, it didn't work. This one here, it actually went up a little bit. This one, it worked really good for warning you guys about what's coming. This one worked really well. This one did not. This one worked very, very well. This one worked very well, and so forth, okay? And why I'm giving you guys the strategies is because I don't want you guys just to follow the colors. You guys, you can use other signals because when this gives you a bad signal, which all indicators do, nothing's 100%, this tells you, uh-oh, this might not be accurate, so I better not trade during this situation. Again, 5 steps forward, only 1 step back. I don't want you guys to make a bunch of money using my strategies and then lose all of it by not, not having all the tools you need. So that's what the colored candles does. I'm going to open this back up very fast. Now we're going to be looking at real-time internal structure. You guys are always going to have this checked on as far as I'm concerned. You guys are going to see bullish structure and bearish structure. Green is up, red is bad. Basically, you guys understand that. You guys can change the colors. A lot of you guys, or not everybody, some people are colorblind. If you guys want to change them to colors that pop more in your eyes, by all means, go for it. Otherwise, you guys can change the colors as much as you guys want to. Typically, for me, green is fine, red is fine. I've known some people that like the extra green color right here. You can see the breakup structures right there, just a little bit more green. It's really all personal preference as far as I'm concerned. Next up, we're going to have confluence filter. This one is pretty interesting. Filter non-significant internal structure breakouts. If you guys feel like you're having too many signals, you can always hit this and it'll take some of them off. So right here, there was a break of structure. It took it off. See right there? You don't really need to see that over and over and over again. If you like to see everything, you can leave it. You can leave this unchecked. For me, I tend to leave it unchecked. I don't mind having all the signals. It's just another reminder that we broke another high. Okay. Now, going back up here to bullish structure and bearish structure, the only reason that I would say give this a second look is you guys will see breakup structure or change your characters. Sometimes people don't like to see breakup structures because all that is breaking a high. Your eyes can tell you you're breaking a high fairly easily, but if you guys are a beginner, I would just keep it at all. So if I were to do this very fast and just make both of these just change of characters, all of the breakup structures are going to go away. I like to have it set to all. I want to have all that information for myself. Even if I can see it, I still want to have that information because sometimes, you know what, we're just busy or multitasking when you probably shouldn't, but we are. So it's good just to have that as a refresher for your brain to subconsciously be like, oh, that's a change of character. Next up, we're going to be going over here to label size. You guys will notice that I'm zoomed in at 175%, and you guys can maybe barely see this, but if I go back over here to 100%, of course, it becomes very hard to read, even for me. I'm wearing contacts right now, and I'm still kind of struggling with this. You don't want to be squinting while reading your charts. It just makes the process of trading just more difficult than it has to be. So I'm going to go back over here to 175%. I'm going to open this back up. And what I'm going to do is I'm going to turn the internal label size from tiny to normal. And then I want you guys to come down here, skip everything until you get to swing label size. And again, make that into a normal size. That way you guys can see how everything pops. Very easy to see. And even though I might go back to, 100%, it's still small, but at least you can read it. And that's what I want you guys to be able to get out of this. You just want you guys to be able to see what's going on here. Especially if you're not looking at the whole chart. Maybe you may have 2 separate charts or 4 charts on your screen. You guys want to be able to see everything that's going on without having to take and waste time to zoom in and look at it. All right. Next up, we're going to go over here to real-time swing structure. Show swing structure. This is basically just saying display swing market structure. The difference between internal structure and swing structure is swing structure are the solid lines, internal structure are the dotted lines. So when I zoom in right here, this is an internal structure. So if I were to go back over here and I were to turn this off, that would disappear. And of course, if I found a longer one like this breakup structure and I were to turn off the swing structure, this breakup structure would go away, this breakup structure would go away, and that's basically what you guys are looking for there. The way I would use it, of course, for swing structure, I would leave it on 100% of the time. Same thing works here, breakup structure versus change of character. If you just want to see one or you want to see both, it's up to you. I would keep both of these all. Swing label size, of course, normal. You can do show swing points if you would like. If I were just to hover over this very fast, display swing point as labels on the chart. Let me show you guys what this does. Right there, high, high, low, higher, high, right? That way you guys can follow along with what we talked about a few minutes ago. Lower highs, higher lows. I do not keep these on the charts because, of course, anytime we break above those, you guys are going to get either a change of character or you guys are going to get a break of structure. You guys don't need them, but if you want them, you can, of course, have them on your charts. It's one of those things where it really doesn't matter because you have something else set up, but perhaps you didn't want to have your change of character set up eventually, and you guys just wanted to have that. That's a way to do it. So I'm going to turn that off. If you guys do want to do this, you can test out the numbers here. It's basically how many candles do you want to be looking at for each of the higher highs and lower highs and things of that nature. So show strong, weak, high, low. Highlight the most recent strong and weak, high, low points on the chart. These are a little bit smaller, but you guys should be able to see them right here. Equal lows, equal lows. you're basically seeing a level of support, or if you find the highs, you're looking at a previous level of resistance. See how there's a little bit of a level of resistance right there? For me, I don't really need these in my charts, but this is a personal preference when I would say for you guys, if you feel like sometimes you have trouble looking at levels of resistance or levels of support and you want the extra help, by all means, I would say leave that on there. You're going to notice these are not at the exact, it's not going to be exact horizontal line, but it's just showing you, hey, there's some resistance up here. So next time you come up here, be careful because you might get hit right back down. And of course, you got hit right back down right there. So it's just a little bit of heads up. If you guys can see it pretty easily, you guys are fine. If you guys don't want to add rectangles or trend lines onto your charts, this is just an easy way to kind of skip that process. For me, I actually like drawing on my charts. I like giving myself little notes and little tidbits of information. If you guys don't want to go that far, maybe you're at work or something like that, you just want to see what's going on really fast, that's an easy way to see what's going on. So I'm actually just going to keep this checked on. This is a personal preference though. Next up, you guys are going to see order blocks. You're going to see internal order blocks and swing order blocks. I'm going to try to go over to a smaller time frame here. So this is going to be a 1 hour chart, and you're going to see a lot of stuff on here. Normally, you're not looking at that much data all scrunched up. I'm just wanted to show you guys some order blocks and what they look like. So right here, we have some order blocks. These order blocks, if I come back down here, they're only internal order blocks. Let me just highlight there. Display internal order blocks on the chart. Number of internal order blocks to display on the chart. Typically for me, I think anywhere between 5 and 10 is fine. If I show you 10, you're going to see a lot more lines pop up on this chart here. This is why I was zoomed out originally. It shows you all the ones from back over here. So you have a lot more levels of support and levels of resistance. You see all these red ones over here. There are a few that are kind of overlapped a little bit, but you can see them. If you guys are going to be day trading on smaller time frames, less is more for me. So 5 is going to be plenty. If you guys are looking at longer term charts and you just want to see what could happen over the next few quarters or next few months, or even the next few weeks, it's probably better to have up to 10. But for now, let's just keep it at 5 so our charts stay pretty well organized. Afterwards, you're going to see swing order blocks. For this one, I'm actually going to go back to the daily chart for Bitcoin. And don't worry if you guys are not crypto bros. I'll be doing stocks here in a little bit and Forex just to kind of show you how everything blends together for some really nice results. So I know it's behind my head. I know. If I turn on swing order blocks, you guys are going to see something a little bit different. You see how these longer term ones popped up here? They're stronger. They're more important. You're not going to hit them as often though. So if you guys have it on and you guys notice, oh yeah, we're not going to come into contact for that, come into contact with that for a while, you guys might not want to have them on a chart. Typically, I would say go for it as far as keeping them on, but maybe you only need to have 3. Right? If I were to go over here to a weekly chart with Bitcoin, and I were to take off the internal order blocks, you're not going to really see much stuff here. If I go back to 5, maybe it'll add some more stuff on here, but typically on those longer time frames, you're not going to see all too much. This is for more of you guys that are looking for those strong levels of support on the 15 to 4 hour charts, 15-minute chart. You can see how this is a pretty big level of support right here. This is a pretty big level of support right here. This is definitely a pretty big level of support. If I were to interchange that right here with the internal order blocks, remember, well, swing order blocks, see where they are. Internal order blocks, not as powerful, not as powerful, not as powerful, but they're still there. They are still levels of support that you guys should be aware of. So for now, I would say keep both checked on, have both set to 5. If you guys want to do order blocks like swings, you guys can move this down to 3 if you just feel like your chart's too cluttered. Typically, when you have a volatile asset like an NVIDIA stock or a Tesla stock or a Bitcoin or even a crazy currency pair, you guys don't really need to have too many order blocks as far as internal and swing because they're moving up a lot. They have all those levels of support and resistance. When you have something like that's very boring and kind of goes sideways quite a bit, maybe it's in a range, in those circumstances, you guys really don't need many order blocks at all. It could be 2 on each, and you're going to be just fine because you already can see those massive levels of support because you're just going sideways. And it's not as much fun, of course, to trade, but some people just like to buy at support, sell at resistance, and there are certain stocks out there that make it very easy to do that. They range, that's all they've been doing all their life. maybe because of high dividends or something like that, but that's what they do. All right. Sometimes with currencies that are kind of flat as well. Next up, we have order block filter. So we have two options here. Let me just move this down here and let's move this back over to a daily chart. I want you guys to be able to see something nice. There we go. All right, so we got two options here. It's going to be ATR and cumulative mean range. If I'm just going to highlight this very fast. Method used to filter out volatile order blocks. It is recommended to use the cumulative mean range when low amount of data is available. Most of you guys are not going to have a small amount of data. Think of maybe a stock that just had an IPO or something that's freshly new out on the market. There's just not too much data available. That's where you guys might use the cumulative mean. When Bitcoin's been around for 10 plus years, Apple, Tesla, Nvidia, whatever, AMD, whatever, you guys are probably just going to stick with ATR. You don't have to really worry about it too much. If I were to change it, you guys will see it just made those lines a little bit thicker. It didn't do too much. I tend not to like that because it usually gets people to buy in a tad too early, so they don't get the best price. If you don't get the best price, you're typically losing out on a little bit of profit every single time. Over the year, that profit adds up, and it can be a lot. So I just want you guys to be prepared for that. So for now, we're going to change to ATR. You'll see how it just shrinks a couple of them. Nothing crazy. Next up, you're going to see a few different colors here. Internal bullish OB, order block. Internal bearish OB, bullish OB, bearish OB. Of course, OB, just to say again, is order blocks. This is if you guys want to change the colors on the order blocks. Typically, the way I look at this is perhaps some people like to have different colors when it comes to swing order blocks versus regular order blocks, internal order blocks. I do not mess with these whatsoever. I don't necessarily care about the different colors and whatnot. Order blocks that are support are blue. Order blocks that are levels of resistance are going to be red. All right. So what I'll do very fast just to show this to you here, I'm going to go over here to a 15-minute chart. You'll see a lot. See how there's a darker blue right there? That's a stronger level of support. A lighter one's not going to be as strong. Lighter red, not going to be as strong as a darker red. So what I'll do very fast, and I'll make this as easy as I can for you guys. We're just going to go through a replay here of Bitcoin over the past 24 hours or so. This is on logarithmic and it's auto, so all the data fits in the screen. We're going to be going at 10x, and I want you guys just to kind of focus on what you guys are seeing here. There's an order block right here. Bounced off of it once. A new order block there that's not as strong, but we still are there. We haven't touched it yet. Hovering. Hit it. Broke down below it after the first attempt. Once he broke down below it, what happened? We're coming down here to this next order block. Bounced right off of it. Scalpers, you guys are going to love this on the 15-minute chart. Still held. Notice how we broke down below it, but we didn't actually continue to move down. That's something that you guys, that's why we're going to be adding other tools to this eventually. We have a green change of character, and notice how we had two bearish change of characters and breaker structures right there. Whoosh, that gave us a heads up something bad's coming. Now we're looking pretty green. Bounced off of the order block. Bounced off. You had a typical breakout. You're hitting a level of resistance right here, going into that harder level of resistance. Got knocked back down. That could be a place for selling. Now, I'm not going to go through the whole 24 hours or whatever, but that's just an easy way. Like, wow, look at that. It worked out pretty well. Just with using the order block and some simple technical analysis, you guys were able to make a couple profitable trades there that you guys could use to make some good money. Whatever you guys want to spend that money on, it's of course 100% up to you. Now, if you guys are enjoying this so far, please, I remind you guys, please make sure to give me a subscribe and a like and even a comment. It goes a long way on YouTube. Trust me, I am not good at the algorithm, and I'm hoping you guys can help me out there. Now, we're going to go back over here to a daily chart. Back over to settings. And we're going to scroll all the way down here to equal high lows. Displays equal highs and equal lows on the chart. We're of course going to change this label size to be normal. And this is basically, do you guys want to have those highs on your chart, those lows on your charts, or not? For me, I don't preferably actually like to have them on because I can see it. I will draw my own levels of resistance, especially because I like to trade on 4-hour charts, daily charts, weekly charts. Those lines don't always change all too often. They're pretty heavy. They're pretty hard to break through. whether it's a support level or resistance level. If you guys are actively day trading and you guys need the extra help, or you guys just want to have the extra signal, I would say by all means go for it. If you guys are day trading, I would actually encourage you guys to use it until you feel like you no longer need it. After a while, you're just going to notice it. It's just going to be in your head, and you guys don't have to worry about it. But until then, I encourage you guys to use it. For now, we're going to be using it. All right. Bars confirmation. How much data do you want to be using in those equal high lows? You'll see this right here. Number of bars used to confirm equal highs and equal lows. How long are we treating that as a resistance level? So if you want to have a short-term resistance level, you guys can keep it at 3. If you guys want it to be a little bit more of a stronger level of resistance, you can have it be a 4, 5, 6, 7, all the way up to 10. Really, 5 is as high as I typically would go. And don't forget, you're also going to have those order blocks there as a huge help. So you're not always going to have to use that equal high low. Threshold, 0.1, leave this here. Sensitivity threshold in a range of 0 to 1, used for the detection of equal high lows. Lower values will return fewer but more pertinent results. I like lower and more pertinent results, so I get as close to 0 as possible. The default setting is the best. I've talked with the owner of Lux Algo about this a few times. This is going to be the best result as far as I am concerned. And of course, label size normal. You talked about that. Don't have to worry about it. Next up, we're going to be talking about fair value gaps. This one is checked right here. It doesn't do anything until you check the top one right here. Fair value gaps displays fair value gaps on the chart. You will see quite a few fair value gaps, on this chart. If I go right here, I turn it on. Oh, there they are. All right. It's been a minute since Bitcoin's had some large ones, but I guess if we go on a smaller time frame, you're going to see more of them. All a fair value gap is you guys notice when we have a very large candle, typically we come back into the body of the candle in order to find a nice level of support or sometimes resistance if you're going the other way. So you see this large candle right here, broke out above it. Typically, the price action will come back somewhere into this daily chart. A lot of times it'll actually come back into this halfway point, and from there it'll go up and start going back into that overall trend of going higher. Is there a bearish one I could show you guys just on the other side of this? This is a Bitcoin daily chart, and of course it's been a little bit different. No. You see how we have one right here? We came back inside to tap on it, came back inside a little bit. So that means that typically when the end of the candle's over, you're not going to buy when the candle closes. You're going to wait for the candle to the price action to come back down. You're going to get a better price. Better price is the big concept here, and you're going to move higher. So let me go over here to a 15-minute chart. See if I can find a nasty candle. Here's one. This is a 15-minute chart. It's not going to be massive moves, but retested it. You could even see it come back over here if you wanted to extend it. There are certain other indicators that you can. I think Lux Algo has a separate one where you can actually extend this, I believe. But you can see right here, hit the bottom, the middle level right there. You buy, and it continues on the overall trend, especially after you have a change of character right here. You're feeling much better about the situation. Same thing right here. Came back into the fair value gap. Keep on riding it. You're fine. On the bearish side, we got rejected off of an order block, it looks like a little bit ago. Came back down. Hit it again. Kept on coming back down. So if you're looking for a short, this is where you can take it. Or obviously, you can take a short at the big level of resistance. That's right there. Your choice. Some people have different strategies. Scalpers might choose this, but some scalpers may choose that. You can see the resistance clearly, so it's really up to you. But again, do you want to be scalping or shorting in a bullish trend? That's a little bit difficult. Now, for me, I don't necessarily trade these, so I'm going to turn this off just for now. But by all means, if you guys want to learn more about fair value gaps and you guys feel like you're confident enough to start trading them, if you guys don't want to have multiple indicators, just come over here and turn it on. It'll be your best friend ever. It'll just save you a lot of time. And of course, it's going to be saving you money. Now, time frame chart, keep this at chart. There's no reason to have this really be moving along. Sometimes if you're looking at a 4-hour chart, you could have it be set to 4 hours. And that's okay. And you may be looking at a daily chart instead, but typically you don't have to worry about it. Change the colors, no. Extend fair value gap. Oh, so this is new for 2024. So let me actually add this back on very fast. If you want to have this extended further, so you can see that level of support further along, this is what you guys are going to do. 10. Wait for it. It's loading. I added 10. 10's a lot, so let me just go back to 5. There you go. Sped it up a little bit. And then you have that support level. You have that support level, and you can just see it for a longer period of time. Typically, I won't use it further than like 5 to 10 candle bars out, because by then there could be a whole other pattern developing. There could be another change of character, something happening that just doesn't match up completely with what we've been seeing here. So for now, let me turn this back off. Here you guys have something interesting. As far as the high lows and the premium discount zones, these are 100% your choice. Do you like it? Do you not? When you guys add dailies, weeklies, and monthlies on, what these are telling you is the previous daily highs and the previous daily lows. I'm going to be using these primarily on smaller time frames for day traders, because the last daily high is going to be a level of resistance for you to break out above. The last daily low is going to be a level of support that's going to be hard to break down below. So what I'll do very fast is I'll just turn this on for daily. There's the daily low. The daily high is right up here. So these are going to be levels of resistance and support that you guys are just going to be aware of. Sometimes they match up with order blocks. If they don't, treat them pretty much like an order block as far as I'm concerned. If you see that there's an order block somewhat below it, the order block is going to take preference over the daily low. If there's an order block slightly above it, the order block is going to take a little bit higher preference over the daily high. All right. Sometimes we just have a little bit of a wick. We test it, then we get back down. But it is important that you guys understand those order blocks are going to be more important here. Now, you have different options. You have dailies, weeklies, and monthlies. Dailies are important. Weeklies are more important. Monthlies are more important than weeklies and dailies. Just keep that in mind. The longer the support's been there, the longer that price has been there, obviously, more important it's going to be. So for instance, I just added the monthly on here. So this is the low. I'm not going to go all the way back there. This is the high. You can see how the previous month's high, see how it was levels of support. Even though you had to change a character here, maybe there was an order block at the time, but you see how it was level of support. When we finally did start breaking down below it, we broke down below it. It was level of resistance, a little hidden one. Broke out above it, kept on going up, broke down below it here, broke down below it here, found a way to bounce up. This doesn't always happen, but it can happen. And of course, broke down below it here, and so forth. So if Bitcoin finds a way to get back up here, that's also going to be a level of resistance. I can drag myself over here down the road. Okay, they're going to be much more useful. And that's important in case you guys are day trading and you forget to zoom out a little bit to kind of see what's going on. It's just a reminder, okay, what's that line? Oh yeah, that's going to be a level of resistance. Or, oh, that's going to be a level of support for me. I don't use these too much, but you guys can if you want to. If you guys are newer as far as day trading, I'd recommend it. I would say the people that have the most benefit from this are typically going to be those that trade currencies. So it could be a cryptocurrency or a forex pair. Stocks, it works, but it's less reliable, I would say, in the stock market. Not that it's not reliable, it's just less useful, I would say, overall than people when people use it on forex pairs or cryptocurrencies. Primarily Bitcoin when it comes to cryptocurrency. Altcoins can be kind of all over the place, as you guys might imagine. Next up, we're going to have premium and discount zones. So if I tap this on right here, let me go back to the daily chart here just so I can show you guys what's going on. Zoom out a little bit. There we go. You're going to see it has a premium zone right here, equilibrium zone right here, and a discount zone right here. These are traditionally going to match up with order blocks. I don't like this on my screen. I think they have their purpose, but it usually is at a level of resistance or a level of support that some other indicator on this chart is going to tell me. So if you guys are not using order blocks and you guys just want to use this, by all means you can do it. So what I'll do very fast is I'll take off the order blocks just like before. I'll go over to a 15-minute chart. And I will go over here and do a replay. You will see a discount zone, an equilibrium, and a premium. Let's just go through it. Discount zone, also having a weak low at this point. It broke through. See, it was at that first one. We bounced right off of it, but still, that discount zone wasn't really too good. We hit the equilibrium. That could single only change in the momentum completely. But let's see. It changed a little bit here. Not my favorite. Discount zone here now. That's the new discount zone. You can be buying if it goes that low. See, I don't really like it all too much, to be frank. That's kind of my personal thought about it. It has its uses, don't get me wrong, but it's just not something that I particularly like to use all too much. You see that premium zone? Well, I would have just had an order blocker right there telling me that. That's much easier for me than to use this, especially because the equilibrium doesn't work as well as I would like it to. But if you guys find a way to use this and implement it in strategy, you're not going to get hate by anybody, of course, not me. It's just be profitable. I'll be proud of you. So that's one reason right there. I just don't use it. It's a personal preference. I do not use it all too much. It's just something that I haven't really found a good use for just yet because everything else in here works so much better at giving me those tools or giving me those alerts to say which way the price action is going to be moving. Now, next up, we're going to be going over here to style. You guys don't have to change anything here. Nothing. Don't worry about the precision. None of this stuff. Visibility. Don't worry about any of this stuff. Now you guys have a clear understanding of how to use this as far as how to change all the settings. Now we're going to be working on strategies, where to buy, where to sell. And to do that, this is the reason that I told you guys to start up a new layer or a new layout, on here. So what I'm going to do is go over here to the daily chart. I'm going to make sure the auto is on plus logarithmic. And I'm going to come back over here as well and just turn those order blocks back on just so everything looks kind of nice. And you will notice when you add those order blocks onto your screen, if the order blocks happened a long time ago, it is going to mess with the auto of your chart and it's going to put it's going to squeeze it down a little bit. I don't really care. If it doesn't look good to me, I will just manually fix it. But some people, of course, don't like that. So just be aware that you can fix that by having less order blocks rather than more order blocks. So now we're going to go over here, manage layouts. I want you guys to rename this to Smart Money Charts. You guys can name it whatever you guys want to. Hit save. Next up, you see how you just have a select a layout, but it only shows you one? Well, let's make this very easy for ourselves. And you guys can put as many as you guys want on here. Some of you guys have different plans, so you guys might not have all the options. But for now, why don't we just do something like 4? Okay, look at that. Everything transferred right over. It makes it really nice and easy. So you guys can now implement different strategies in each chart. So this one chart could be for momentum. This one chart could be trying to find reversals. This one chart can be trying to find longer term patterns that last for months, if not weeks, if not months. And this one right here could be something more for scalping. Now, what we're going to do is we're going to come over here to the original chart and we're going to put up one strategy that I think you guys are really going to love. It's one that most of you guys will know on this channel. And this requires us to add a few more indicators. So we're going to be adding a moving average simple. For whatever reason, they changed the name of their moving average on TradingView. It's no longer moving average. It's now called moving average simple. I don't know why they did it. I truly love just having a moving average. But anyway, I want you guys to click on this 3 separate times. 1, 2, 3. Let's do this fast. Go over here to settings. Let's change this to 20. Source, close. Nothing else has to be changed. Style, we're going to make it green and thick. Okay. Next one, we're going to go over here and do a nice little baby blue. Go over here to input, 50. Everything is going to stay exactly the same. Last one is, of course, going to be a 200. Style, yellow, and we're going to make it thick. And just like that, we have our bases. This one, for whatever reason, didn't go thick, but I can fix that very fast. There we go. And now we're going to be adding some crossovers on here just so you can see when death crosses come on top of a change of character. That's going to help you guys figure out a little bit more of what's going on. You see how there was a death cross here, but then you had a bullish change of character? Well, that stopped you from buying there because you saw that previously there was a death cross. You don't want to be buying after a death cross. It doesn't really make much sense unless you're looking at more of a crossover. So that kind of helps you out right there. Back over here. Now, this was a banking crisis, so you're not going to really be trading during crises. If you're new as an investor, it's very high risk. You can make a lot of money, of course, but it is just so high risk that it's very dangerous because it can blow up your account very, very fast. But you will notice that we did have a change of character here. We bounced off of the 200 daily moving average, and then we managed to pop back above. There was a bullish change, a bullish crossover here, golden cross, and we did end up going higher over time with some nice levels of support shown by the equal lows. Even a break of structure where we went a little bit higher. Now, after this, we're going to be adding on 3 separate indicators again. The first one is going to be a MACD indicator. Something that I want to let you guys know, the settings that you guys are going to be using for this one are going to be staying the same at 12, 26, and 9. You're going to leave the sources closed. But I have my default MACDs now set for auto thickness. If you guys want to have it be an auto thickness like this, go to MACD, the blue line, make it thick. Same with the orange one. And then you'll come over here to default and save as default right there. That way, every time you add a MACD onto your chart, now the lines are thick. This is only because, again, we are zoomed at 175. It doesn't look too bad when you zoomed out at 100%. Same when we're going over here to these, let's get the replay mode. When we go back to all 4 charts, now it doesn't really look that bad when we're zoomed in at 100%, just so you guys have a little bit of an idea of what's going on there. Now, back over here to 175, so I can go back into my teaching mode. Afterwards, we're going to be going over here to RSI, Relative Strength Index. Again, this one is not set to thick, so let's make that thick very fast. RSI is going to be thick. RSI baseline right here is there. TradingView's RSI, I'm not going to get into it too much. It's just a little bit different. Most RSIs, honestly, are not going to have that yellow line. It's just something that's on TradingView. It's weird a little bit, but I don't think it matters. In fact, I like using it as crossovers to give me good ideas of what's coming along. For this one, you guys can have the RSI length set to 14. If you guys feel like it's giving you too many signals and you guys don't like what it's going through, you guys can set this to the level of maybe 20 or 25. I've seen some people use 21, but for now, let's go over here with 14. I think that's going to be fine. Source is closed. If you want to see the divergence on your screen and you just want to say, hey, there's a bearish move here, bearish move there, bearish move there, bearish move there, or bearish divergence, you guys can have that. If you're new, I would say keep it on there. If not, it's okay. You will notice that right here is bearish. We had a little bit of a move down. Bearish right here. We, in fact, went down just a few days, but we eventually went up. This is why I'm giving you guys all these tools so you guys don't fall for all these different signals that you guys are going to get, and I'll explain more here in the next few minutes. If you guys want to, you guys can do one last thing when it comes to the RSI. You can have the MA type right here, which is going to be this yellow line. You can have this set to a few different things. Volume weighted moving averages, EMA, or Bollinger Bands. For me, typically, I'm just going to say stick with simple moving average. Don't make it more complicated. You have enough tools on your screen to make profitable trades. Don't get crazy, because you can make any chart look very crazy if you want to. Standard deviation, you can keep that as 2. Standard deviation, only matters when it comes to Bollinger Bands. If I turn this to 5, nothing happens, okay? But if I go over here to Bollinger Bands 5, and I go back to 2, look out of it, there you go. It'll shift. Time frame, keep as chart. You don't have to change anything else here. Afterwards, we're going to be adding one more, and this is going to be the stochastic. Just type in STOCH. Right here, you notice it's one of my favorites. You guys know I love this one. For me, when I look at these charts, this is giving me way too many crossy signals. I don't like it at all. So what I did is I went to ChatGPT, and I made a video about this if you guys want to look at it down the road. And what I was able to do is I was able to use ChatGPT to give me a few options to backtest. So I didn't know exactly what was going to work for my charts. I spent hours trying to figure out the right number combination here. And I found one that worked out really well. 21, 5, and 5. Nothing else matters. Nothing else has to be changed. You can make these thick if you want to, but again, that is personally, that's your choice. Hit OK. Now, here's typically how we're going to be using these tools. I'm going to hide this right here just so I can see a little bit more of the chart. I'm going to squeeze this down a little bit, squeeze this down a little bit, and squeeze this down a little bit. I'm now going to back up and go back to 100%. And what I'm going to be using is a simple vertical line tool to show you where each of these signals, change of character, break of structure, RSI, MACD, stochastic, where all of these said green or all of these said red, and what happened following those signals being given to you. Vertical line. So you notice that we had a green signal right here. right there. At this time, we also had a green signal coming right here from the MACD. We also had a green signal right here coming from the RSI. And we also had a green signal coming right here as far as the, oops, I double clicked that. That's okay. One right there coming from the stochastic. In fact, I would say the stochastic probably was 1 day late. So what this means to me is when I see all of those signals, that's typically where I'm going to buy because the momentum is shifting. And one of the things I like about this is usually a few days after you buy, or if you're in a different time frame, usually fairly soon after you buy, you'll notice the chart is moving a lot faster in your direction because you're catching on to the momentum. You're not buying and waiting for a long period of time to make you money. You're buying, the price action goes in your favor, and then you make your money, and then you sell. It's simple. Now, a few things I want you guys to understand here. If I were to get rid of all these, and I go back over here to replay before this happened, you see how there's a sell signal here, a sell signal here, a sell signal here, and a sell signal here, but there's this fat order block right here. That order block protects you from going into a short that doesn't make much sense. On top of that, you have a golden cross that recently happened. There's mixed signals here. Those mixed signals are telling me, everything's not really pointed in my direction, so I don't feel comfortable making this type of trade. Now, something else that you guys can also do here, what I'm going to get out of the replay mode for a second, is you can look for other time frames to find that information for you. So typically the way I do it is that signal that I just showed you, or that setup I just showed you, like everything's pointing green, you buy, everything's bearish on the change of character, you buy, those order blocks aren't necessarily there just yet. You see how you break above that order block that might have been right here, you broke above it, okay? Now, I'm also making sure that on the weekly chart, I see some bullish moves as well. So you see how when I change a character here, everything was green, green, and green right around here. And of course, with the change of character, if you guys are looking to hold for months at a time, take some time, you want to go to the weekly charts, same concept applies. And you guys will notice that weren't perfectly fine. If you guys are looking for selling signals or signs that say, oh, what should I do? You guys can see right here, there was a sell signal, sell signal, sell signal. You can take some profit. Buy here, sell there. You're still walking away with profit. I know there's a feeling amongst a lot of investors that they have to make the most money possible. And the way I get around that is by simply just scaling out some. There are different ways to scale out in these scenarios. Just, there's a little bit of resistance right here. Resistance right there. Sell a little bit. There's a 200 weekly moving average right there. That's the level of resistance. Be careful right there, Back up a little bit. Hey, there's a level of resistance right here. Oh, guess what? We were hitting that level of resistance right there. Why not scale out a little bit? Now, there's other factors, like inflation and economics and what's going on in the world, of course. But usually, this gives you a good idea. Just like, hey, don't be greedy. Just take some profit. You don't have to sell everything, of course, but just take some profit. That way you can lock it in. And when you lock in that profit, you notice your portfolio definitely starts to go higher and higher and higher. Now, another way you guys may be using this is I would say if everything is pointing green, like over here, look at this. Buy, buy, buy over the last few weeks. The daily chart also screaming buy, buy, buy. Well, 4-hour chart, guess what? If you want to be buy, 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 everything through here, a lot more mixed signals because, of course, a lot of stuff's happening. But you can even see within this, if everything is green on the daily and the weekly charts, that means most of the time, I would say if you guys are new investors, 100% of the time, you guys are just going to be sticking to going long and following those trends. And let me explain why. So let's say if I were to zoom in here, we had a buy signal here, a buy signal here, and a buy signal here, breaking out, having a new breakup structure. When you're typically opening a trade like this, you're going to have your stop loss be somewhere down here, a previous low. This looks like a pretty decent one right there. So you're going to buy up here, okay? And you can see it doesn't really work out in the short term, right? Boop, comes down. But your stop loss doesn't hit. But the overall trend is working out in your favor. So typically in these circumstances, you're not just going to have a full-on crash and capitulation type of event. So you're going to keep on going, keep on going, keep on going. Then all of a sudden, the price eventually makes that move higher and you're going to be fine. The thing that happens here is basically you're going to be in that position longer than you might have wanted to be. but you still have a great chance of making profit. Now let's move on a little bit further on this 4-hour chart just so I can show you something else. You can see this right here was a sell sign. Everything was screaming sell. Okay. But the daily chart and the weekly chart were still very bullish. So if you want to go against the grain, which I don't recommend if you guys are new, but if you're more experienced and you want to go against the grain, you can. But you have to understand that if everything is bullish on the larger time frames, it's only a matter of time before it corrects itself and starts heading back up. And that's crucial for you guys to understand. It's difficult sometimes. I struggle with myself because I zoom out and I'm like, okay, everything is good, but the chart just looks so nasty. I usually have to wait for those weekly and daily oscillators to turn bearish before I myself will get happy enough to actually start loading up on those short positions. And you can see over this period of time, there were some steep drops. And look there was a warning right here. Before this crash even happened or this small move happened, it corrected itself very quickly. Now you can go against it. You can make money by shorting this if you wanted to, but most people are going to get too greedy. And when they get too greedy, they have their stop loss right here after they short right here, stop loss right there. They have a price target that's way down here at the next order block, or maybe this order block. There's probably one right here, but I'm not back enough, or I don't have enough order blocks in there. Well, guess what? It spikes up, corrects itself like the daily and the weekly charts would suggest, and then your stop loss hits when you had an opportunity to take your profit and run. So if you are going to do this, scale out a little bit, lock in at least a little bit of profit. That way you guys aren't going to be stuck in those situations. I myself got stuck in a situation right here. Right? Now I was able to lock in some profit because you can see there's some support levels right here. However, it moved up so fast, and I will remind you, it was in the middle of the night, so I was sleeping, where my stop loss over here got hit. And then of course went all the way back down, but still kept moving higher. So I only made a little bit of profit. And that's not really what I wanted to do. I wanted to make a lot of profit, and I didn't want to worry about that stress, the stress that comes along with trading. You don't want to deal with that. So that's one way right there. Another way, of course, is if you have everything going along, you can go over to the 15-minute chart. And if you want to use the 15-minute chart for trading, sometimes you don't have to, you can ignore the weekly chart if you want to. I'd rather just have everything going in the same direction. But you could be looking at the daily chart, the 4-hour, and if both of those are very bearish and you see some bearish moves on the 15-minute chart, you can hop onto them. For example, change of character right here, sell signal, sell signal, sell signal. It went down, and it went down to a level of support kind of over here. It did not hit this order block, but it came pretty close, but it didn't hit it. Okay. So your stop loss would be either right here if you're taking a short, could be up here or could be all the way up here. Typically, if it's a shorter time frame, you just want to worry about that. Comes down, everything is more bullish again. You have a bullish divergence on top of all the buying signals, and it went up. You can definitely do it that way. If you guys do, even if you guys didn't look at the daily chart or the weekly charts, you can see that when everything is bullish right here, bullish, 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 it still does fine. Everything is kind of bearish, bearish, bearish right here. It still comes down, but the profit you're looking at is not necessarily going to be a lot. And before we move over to the second strategy, let's just pull out a random stock. I don't know. What's Netflix doing? Daily chart here. Auto. The order blocks will make it crazy, I know. So stocks have a little bit more of an issue because they have earnings reports, which can cause some really crazy gap ups and gap downs. But if you took all the buy signals that were just right here, you still had 2 days of profit, and those 2 days of profit worked out fine for you on top of the breakout off of the earnings results. Go over here. We have a sell signal right there before the change of character. We have a sell signal and a sell signal. Look at that. It worked out beautifully. It worked out absolutely beautifully. Change of character right here, a buy signal right here, a buy signal way back over here, and a buy signal over here. Worked out beautifully. Same thing right here. You had them before. You had the sell signals before the change of character. Change of character comes along. Boom! Look at that. You're looking pretty well. So it works out very well as far as I'm concerned. Make sure to test it out with your own stocks and the same things that you guys are trading. Typically, when I'm doing this type of stuff, I only trade 10 stocks primarily. I only trade a few crypto coins primarily, and I'm very good at trading those ones because it's like an endless bank where I can trade, make money, trade, make money. And I know that I am good at trading those specific stocks. Like personally, I don't trade Tesla because I suck at trading Tesla. Never been good at it, just not good at it. But Microsoft, Google, Apple, you know, that's my jam. That's what I'm really good at. And of course, we'll go over here very fast. Let me see if I can find a yeah, crypto very fast. A euro to USD. Now, there are a lot of world events happening right now. Don't get me wrong. So this makes it a little bit more difficult. But you can see there's a buy signal here, a buy signal here, buy signal here. The change of character happened right there. As soon as you buy, the momentum is picking up and you're good to go. Did you buy at this low price? No. But you bought at a lower price and you sold at a higher price and you made profit. That's the way you guys have to think about it. Don't think about buying the most at the very bottom because it's just very hard. This could have been the bottom. This could have been the bottom. People bought and then they lost money. don't fall for that one. It'll hurt you here. You'll notice that we have a change of character right here. Sell signal, sell signal, sell signal. And you're seeing how we have this level of support over here. It's not really working out in our favor. There are times where that's going to occur. This is mostly because the way the Forex currencies work. And if you guys are in Forex, you guys know there's a whole different set of data you guys look at as far as news, wars, bonds, all types of stuff happening in the United States and around the world. So it's a little bit different, but you guys should have that same concept where all of a sudden, you know, we're getting some buy signals here, buy signals, and it's still a change of character. You just might want to be a little more cautious. And when I say caution, I just think of caution as not trading. It's okay to sit on your hands. Why trade if you're not really sure if you're going to make money? I trade when I'm pretty confident I'm going to be making money. I hope I can convince you guys to do the same. Now, let's go back over here to Bitcoin, make it a little bit easier for ourselves for a second. Now, for the second strategy, we're going to make things nice and simple for you guys. I'm going to zoom back in here at 175% so you guys can see the changes I make. What I'm going to do is I'm actually going to come all the way down. I'm going to turn the daily and the weekly MFTs on just so I have those levels of support and resistance for myself. I'm going to hit OK. And then I'm going to add some more moving averages onto my chart without the offset. It's going to be a very simple strategy that works very well. For a lot of people that like to back test and try out different types of moving average crossover strategies. So instead of simple moving averages, we're just going to type in EMA, and you guys are going to see right here, moving average exponential. I want you guys to hit this twice. Next, what we're going to do is we're just going to change these up. The first one can be 9. Let's make this into green and a thick line. Hit OK. The second one, we're going to make this into a 21 period. It's going to be red. So when the green line crosses below the red line, that's not good. When the green line crosses above the red line, that's going to be a good sign. Nice and easy, okay? Now, you can technically use this when it comes to the daily charts. You'll see that it worked out okay, didn't work out well here, it worked out well here, or there was no crossover there, but it worked out okay here. Typically, we're day trading. Let's go over here to the 5-minute chart. Let's go over here. Look at that. Crossover, it's moving in the right way. We have a change of character here, so maybe you want to wait for that crossover and the change of character. Backtest and see what you like. Hey, it went bullish right here. Guess what? It ended up doing fine. Change of character, everything worked out. A red change of character here didn't go your way, but guess what? If you kind of back out right here a little bit, there was going to be an order block. So if I kind of do that little replay thing, there was going to be an order block right here to kind of tell you to not do that, if that makes sense. And that's basically the way the strategy will work. Typically, when you guys are doing this with Bitcoin or some other type of play, like maybe I can do this with a, let's just go to AMD or something like that. You see the crossover happen. You see the crossover happened here. Crossovers happen here. After hours charts, don't really worry about them all too much. Post hours, don't worry about it. Right? If you notice that it's like this and it's not working as intended, what's basically happening is you're seeing too many signals and the signals aren't working out as much as you would like. Then you guys have to remember that you guys are using other parts of your brain and other levels of technical analysis. So you'll see right here that we have a breakdown occurring. Crossover, breakdown. You could short that breakdown knowing the crossover is coming. And then from there, open a position there. If it does break down here, you can always add more to the position or keep on letting it ride. But as soon as you hit that level of support right here, don't be afraid to scale out some. It's okay. You're locking in profits. It comes on down over here to this support level right there. It actually breaks down below it. And then you could, of course, scale out even more if you guys want to. But the way I'm going to tell you guys about this is we're going to go back in time a little bit. Look at it from AMD's perspective over the last few days. Let's just go. So let's start with a very slow day because not every day is really good. And of course, I'd recommend that you guys zoom out a little bit just so you guys can see the momentum. If you guys use the other chart along with this chart, have two separate charts, one looking at momentum, one looking at day trading strategies, it can be very useful. So don't be afraid to mix and match these types of things to help you out, get a more full picture of the way the market's looking. So we have a change of character right here, pre-market. We have the bearish crossover right here. Everything's kind of looking fine, but it's pre-market, so we really don't have much to go off of yet. A lot of volatility. And if you guys don't know, the way you trade stocks a lot, the morning hours and the end of the day, they're very volatile times. So think of it basically a lot of fun, boring, a lot of fun. There are two ways to really trade. And when you guys are doing day trading, you can really prepare and do a lot of trading in the morning and a lot at the evening, or you can try to buy or short in the middle of the day, waiting for that larger move at the end of the day. And you can see if you're right or wrong at the end of the day. So we can do both of these, okay? So in this situation, it was bearish, and you saw it come down quite a bit. That doesn't always happen as fast, but it usually happens in the morning if it's going to happen at all. So, and you'll see the previous day's low right there. We found a little bit of support right there. Not a lot, but there was some support. We're bouncing back up. We have no bullish crossover or anything like that. No bullish crossover. There's no even green change of character. Green change of character and a crossover right there. Hitting the order block, you would normally be buying during this circumstance. On top of that, you can see there's a small breakout happening. Typically, I would like a little bit more of a consolidation, but for this scenario, let's just say we bought right there, okay? Okay, breakup structure, things are still looking fine. Crossover, still looking fine. Your price target, if you're buying right here, is going to be kind of at this level of resistance. Your support or your stop loss is either going to be here or here. If you're day trading options, your stop loss is going to be nice and close because you just don't want to deal with letting it get too far out of your hands. It's going up. Hit the order block again. Now you're waiting for the next day, so we don't want to deal with the next day. All of a sudden, we came back up here a little bit to that level of resistance. Pretty much hit the top of the candle, but not the wick. So that's probably where you might have had an opportunity to exit. If you guys are taking this trade, you see the swing. You see how it's topping off right here? You guys are going to notice all of a sudden, oh, yeah, there's a trend line right there. You guys can go from here to here or here to here. There's different ways you guys can draw trend lines, as you guys know. But if you see that breakdown happening, at the end of the day, you're looking more volatile. So if you're looking more bearish towards the end of the day, you better just get out and take your profit. And again, we're buying down here. Even if you sell on the breakdown, buy low, sell high, you're still walking away with a juicy amount of profit. And that's where a lot of people fail. They're hoping it goes from here to somehow way up here. That's not the way trading works. But again, day number 2, this is still after hours. This is pre-market time right here. And we're about to go. Okay, market just opened. So you saw there was a death cross right there, change of character. That wasn't a good sign. But now we're looking at possibly a change of character. We're breaking that high. We're going to get a green crossover signal. Hit an order block again. And let me just refresh this very fast just to make sure, because I want to show you guys something. Okay. That order block didn't actually pop up until we hit it. There was a level of support here regardless. But what happened is, if you're making that trade, your stop loss is right here. And boom, that stop loss failed. You lost money on that trade. And it's going to happen. You're just going to have to take that loss. Let's continue. Found a little bit of support right here at the daily low. Change of character, crossover, you buy. You see a little bit of an order block right here. The momentum is on your side, it looks like, plus the breakout here. And there's also a breakout from, you can see like a horizontal line right there, basically. Breakout there. So if you're buying right here at the change of character, or you're buying right here at the crossover, either way, it's fine. I might wait for both if you're a new trader. Where's your level of resistance? It's kind of right around here. So that's your in and out day trade. If you guys want to have a level of resistance here and another level of resistance here, let's just add another line. You could have a scale out, 50% of your trade right there, another 50% right there. But you got to watch. It's getting into that zone You got to be thinking over this half an hour or so. Should I be selling? You see how it's topping off right here? You bought right here. Do you want to sell? Do you want to let it risk it? Or do you want to scale a little bit more and let the rest ride? Again, because the end of the day is happening right over here. We're about to get more volatile. Let's wait and see. And at the end of the day, nothing really happened. Now, I don't want to tell you guys to hold day trades overnight. It just doesn't make sense to me. But that's basically another strategy right there that you guys can use. I prefer the momentum strategy, of course, over all others, but this is something where a lot of day traders just love it. And for the other two, you could add a MACD, you could add simple oscillators and tools like that. For those, I would actually encourage you guys to find other types of YouTubers out there and test out their strategies and see how they work with smart money concepts, so you guys can have those color candles. And if everything that they're telling you is also green on top of the smart money concepts, you guys can do that as well. Okay. And again, don't forget just to add your patterns, add your candlesticks chart patterns on there as well. If you guys enjoyed this, I would again once again ask you for a like and a subscribe. I really do appreciate you guys watching this, and I hope you guys learned something here. You know, trading is difficult. It really is. But it's difficult to learn because people, they expect so much money so fast. But if you just kind of take what the market gives you, I think you guys are going to be in a really good shape. But just make sure you guys are prepared to test out all of these things with lots of back testing and of course paper money, so you guys aren't risking your own money trying out my strategies. Only when you're confident that I've taught you something that you guys can use would I actually say invest your own money into it. And that means that your wallet is going to be protected until you guys are able to win $500, or make $500 in the market, lose $100, make another $500. Because typically, if you guys enter the market, you may make 500 bucks, you may lose 600 bucks, you may make 1,000 bucks, you may lose 2,000 bucks. It's very volatile, and I don't want your portfolio to be volatile. I want your portfolio to be gradually moving up over time. Will it have some dips? Of course, like any market, but you guys will be much more confident and much less stressed. And when you guys have a solid mindset and you guys aren't freaking out about every little thing that's happening in the market, the stress level goes down a lot. And I get stressed out a lot, but I don't get stressed out about trading. Thanks, everybody.